We need to take a look at the markets, and I also have two companies that I want to share with you because the technicals, their charts are looking super interesting right now, and I want to share with you because I think there's incredible opportunity. I am Dr. Stock, Doctor of Education, and just to let you know that if you illegally park your frog, you might just get towed away. We're going to take a look at SPY, QQQ, IWM as it tracks the Russell 2000 stocks, and then also those specific companies, Tesla and SoFi, as I believe their technicals are looking super awesome right now. And I will also tell you later where you can see my buys and sells, tell you about my options course, and also where you can learn about technical analysis. In the meantime, let's take a quick look at the economic catalyst coming up. So today, initial jobless claims at 8:30. So depending on when you're watching this video, that number might already be out. Coming in north of 220,000 for that consensus is going to be something good for us for seeing upward pressure in the markets as we see a little bit of softening and pulling forward those expected rate cuts, if you will, as we've been set back by at least a month by the most recent inflation report from CPI. And then looking ahead to tomorrow, speaking of inflation reports, 8:30 a.m., we get PPI coming out for January. So we want to see those numbers continue to come in soft. They don't necessarily have to come in negative, but we do want to see those come out to be annualized numbers that come out to be about that 2%. And these can also lead what's coming up for us for inflation to see if January was something that just happened and it was a blip for those price adjustments going into the new year to preserve those earnings going forward from other companies and also for food and all that kind of stuff. So we'll see. Looking at PPI, I think that's going to be big for us. Then 10 a.m. Michigan consumer sentiment. We also have throughout both days, we have a lot talking about the bond market, mortgage rates. We also have manufacturing information, capacity utilization. It's going to be a big 2 days for us looking at the markets. So let's put that down, and I want to switch over to taking a look at the charts for this. So we're going to kick things off with SPY when we look at the charts. So let me put this up here for you. So for SPY, when CPI came out, that actually pushed us down to the brink. We actually caught the bottom of this trend line and then bounced significantly off that yesterday. So we're actually in decent shape for the markets to continue upwards so long as we still find support down here. Now it's about resistance. Will 500 show us that resistance right now in the pre-market hours? As I record this, we're getting close to that 500 mark. So getting rejected off of that would be an important thing that could possibly send us back down. We're seeing just the slightest bit of just a little bit of tapering in the momentum on the daily charts on SPY. It's a little bit more pronounced when we go to QQQ, when we look at what we have for the RSI on the daily charts for that. Still in bullish territory. However, we're starting to taper off for that. As we pull down closer to 50, that could be, especially the prices keep on rising, that could be a significant bearish divergence that would lead us to a reversal where we could possibly pop out the bottom of this trend line. But just like you saw with the SPY on a Tuesday when CPI came out, we were brought down to support, and I put that out over in the Discord that's available through my Patreon. I said we are brought down to support. We could see a bounce from here as long as support doesn't break. Support didn't break. Saw that significant bounce happen. Now, unfortunately for me, just a quick personal note that I will say that on Tuesday, we got a pretty big snowstorm coming through, and it actually kicked off my power right around 8, somewhere I think maybe even close to 8:30, somewhere in that half hour. We lost power for about 30 hours. So that meant that I was pretty much out of the market on Tuesday, couldn't do a whole lot. Wednesday, I was a little bit messed up for trying to get into the markets as well. My laptop battery held out for a little while, but not for the entire time. As a matter of fact, that died on Tuesday. So using my mobile hotspot worked for a little bit, and then moving over into yesterday, I was able to actually get back into the markets a little bit. But now today, I'm back and fully functional, fully operational. I'm looking forward to getting back into it. All right, let's put this back up here. So what we got going on for QQQ, as we're looking at this, we have 434 is about where we're finding that resistance, and we're actually at the pre-market hours right around that value as well. 435 I think is going to be significant, and just keep watching these trend lines as we have them going on right now. We are in a rising wedge pattern, and right now we're still green lights for moving upward, but should we break down through the bottom of this, that could signal a reversal is on our way. And we've been traveling up for quite a while here with not too much of a sign in correcting, of course, so that's still something that we could still see some pullbacks happening sometime, I would say in the near future, in the month of February, in the month of March. I think sometime it's coming for us. We're going to have to watch and see where that takes place. IWM, which tracks the Russell 2000 stocks. I've been covering this all the way back since the head and shoulders pattern that we had here, saying that there could be significant upside from when we saw this down in the 160s, and it actually popped up to over 200, and then more recently in the pre-market hours we're back up over 200, and I have been dollar cost averaging into this. I just added some more of that. So for IWM, this is one that as we see those rate cuts coming closer, I think we're going to continue to pick up momentum and speed for IWM, which is the small cap stocks which are most sensitive to those interest rates. So we want to see the interest rates come down, and I think Russell 2000 is going to have a heyday with this one as we see it continue from here. Moving into Tesla, check this out on the 4-hour chart. This is an inverse head and shoulders pattern building up for us, and right now we're contending with this 50-period moving average coming down this way. We're above the simple moving average, which is in blue, coming down around the same way, but as we get closer to these near-term price action, which the EMA takes more advantage of than the SMA does, right now we're fighting with it. We might actually break over it. And should we do that, the neckline for this is around 195 to 196. Breaking up through that can give us room up to about 206 or 207, where I think that we will see significant resistance there. Now, mind you, that also implies that we would blow right past 200, and that round number resistance could be an area of trouble for us, so we need to be on the lookout for that one. I have taken a call option position on this one. I am watching it very carefully, though, to see what exactly takes place on this one, but I do think that over the next few days, we could possibly see a further run for Tesla. We're going to have to watch it. Now, that also takes me to SoFi. SoFi is seeing something resembling a double bottom that we have here. We're actually getting into a consolidation pattern for SoFi that we're getting in this symmetric triangle pattern that we have room up to close to $9 per share before finding significant resistance that way. $8.50 is about where we have resistance also, $8.50, then $9. So should we break through the top of that, that's when things get really exciting for us, and we could see further upside. Maybe we even see that over $10 value coming out to SoFi, another company that's going to do well in the light of rate cuts. The more that they get pushed back, the more it's going to be more troublesome for SoFi to continue moving upward. I am a long-term investor in SoFi. I hold their stocks directly, and I also have call option plays out on SoFi right now. You can see yesterday, this blue line here, that's the 50-period simple moving average that we have, and the red is the exponential moving average for that 50 period, and we kind of opened right around that point, closed right around the blue one, the simple moving average, and today we're up above that. Going up above that and having a full candle close above that is a really good sign for further upward movement. We're going to have to watch for that. RSI is looking great on this one, by the way, so the momentum is most definitely there. So if you guys want to see my buys and sells, you want to see how I'm playing this market, you can do so over at the Patreon, and that link is down in the description. So all you have to do is click it, sign up, and get access to everything that's over there, including the private Discord where you can talk with me and my community members throughout the trading day. You can also see my buys and sells over there in the channel. And then I also included a new feature which has been very popular, which is technicals on watch, which are things that I'm watching for prior to making moves on them. That's also available in the Discord. If you guys want to learn about options, you can do so also through the Patreon. There's a link for collections over there. You click on it, you can see how to amplify the power of your portfolio through the use of options. And if you learn to do technical analysis like I do and gain an edge in the markets, there's also a link down in the description for technical analysis trading course, which includes a separate Discord for this. You can go over there, you can talk with me. Stock Mode, this is his course that he has. You can go and check that out. You can talk with him. He also has live teaching lessons that happen over there as well. And he also does some live streams also. So incredible opportunity there. Might as well check it out. So guys, let me wrap this thing up for you. The markets, I do think that there's still room to the upside for the markets. And we do need to watch those support lines on SPY and QQQ for further upward progress from here. And the IWM, that is going to be subject to what happens in the overall markets. But remember that that is the small cap. So as we close those interest rate cuts, the federal funds rates cuts coming up over the next several months, that is something we most definitely want to watch, because that's going to be priced in early by expectation for IWM. And if that gets pushed back, that's something that's also going to punish IWM as well. Tesla, watch that inverse head and shoulders. You can see it. I think the best view for that is on the 4-hour chart. You can see what's happening there. We need to make it up to 195 to 196 to reach that neckline. Up above that is confirmation of the inverse head and shoulders, and we have room up to about 206 or 207. And then SoFi, I think, could possibly take us back up to about $9 per share before we find resistance. Should we break through that, we have room up above $10 per share for SoFi. So that's my summary for you guys. Thank you very much for watching. Check out the link for the Patreon down in the description. Check out that technical analysis trading course as well, and take your trading game to the next level. As always, guys, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.